Hi there, Phil Rogers, Lauren Hall here from Loan Market Edge, coming to you with our weekly wrap. What's trending in lending? Very casual Superhero Friday at the office. Clearly just me again, but the joys of being the
Always
boss.
miss this
The
memo
joys of being
every
the
week.
boss. So what's happening? The good news, brokers. Maybe not all good news.
Are you
So
gonna
I'm
make
going to
me
get
start,
Lauren.
Righto.
I've got a good wrap for you. This is good. People look to me for
I'll
good
deliver
news.
the bad news. What was the bad
correct.
news?
Um,
All right. It's okay. I've got this.
Yeah.
So we had the RBA cash rate increase last week. So we've started to see the flow-on effects of that this week with the variable interest rates going up. Let's say pretty much everyone has passed on that full 0.5. It's just been staggered and when they've been rolling it out. So in most cases that should have hit this week or today. A lot of them kicked off today. So just means if you're out shopping and you've got your pre-approval, you would have touched base with your broker. Your broker would have touched base with you today before you go shopping tomorrow. Don't ring the bank because they're shut, so they're no good to you. But touch base with your broker and make sure you're still good to go tomorrow because that 0.5 has now been passed on. And we know in a lot of cases, depending on the bank, they may be readjusting that when you go back with a contract. I'm talking about your borrowing capacity.
Yeah. Interesting, we saw some stats come out. I think it was taken someone last week, and they were saying that pre the last rate drop, so just this year so far, there had been the average borrowing capacity for a consumer was down 26%, due to purely nothing, no change living costs, nothing in servicing calculators other than the fact that those interest rates have gone up. So a borrowing capacity for a client had reduced 25% in that last sort of 6 months period. So it's a huge number considering where we were 12 months ago. Yeah. 100%. So that plays a huge role in making sure that obviously touch base with your brokers before doing that, because even again, we're up sort of 2% even in the last sort of 12 weeks. So it's really important to check that out.
Other one?
More bad news. So what's coming from you? It's not good. It's topical. It's news. You need to know about it. It's relevant.
You need to know. So this one, isn't great news, I'll be honest. But there have been some changes around the land tax rules in Queensland. So we've been exempt from the land tax stuff, which has been awesome. But there's some changes around that come into effect the 1st of July next year. So if you own multiple properties or investment properties, you need to suss that out and see if that is relevant to you. So Queensland land tax changes is one you want to check out.
Also, Residential Tenancies Act has been updated and unfortunately probably doesn't work in the favour of the landlord or the investors. So jump on and have a read about that as well, just so you know your rights and a good understanding where you sit. Now, if you're working with a good real estate office, you might be self-managing. Just find that stuff out. It's really important. So there's some stuff in there that wasn't wonderful. Probably takes away a few rights. There might be arguments about it does give a little bit more to the tenant, which is great for the tenant, maybe not so great for the owner. So important for our clients because you guys own the properties. So check that out. Good news.
Over to you. That's me done.
The good news broker. Yes. 10 out of 10 for Lauren's bad news. Kiwi jokes never get old.
Oh, wow. I never get new either.
Yeah. I've got none. Discounts, we did see, whilst rates are on the increase, there are still some banks potentially even knowing that that's coming, have still been pulling some of those back, which has been really nice to see. So whilst they've been passing on the full 0.5 prior to that, there were some that just dropped those rates down a little bit prior to that. So it's really hard for the consumer to know who's doing what, and they're moving so quickly. So a rate that you might see yesterday looked really cheap, but not knowing that compared to others, but your bank moved the next day, right? So we're trying to keep up with that stuff and help educate clients through that process. But what we do know with that, the loan to value ratio, and we talk about this a lot, plays a really big role. So there's still some lenders, when we go from let's say a 5% deposit for a homeowner at a major right now was 5.6, so close to 6.1% now for that variable. If you tiered pricing, and there's sort of 4 tiers that are really competitive, and I know we've talked this before, so I know that you guys are probably about to say it and match me, but it's owner occupied, principal and interest, borrowing more than 250 and below 80%, really easy triggers. But if you tiered all 4 of those, suddenly you go from a a 6.1 to now what would have been 3.7 to probably 4.1. So 6.1 to sort of 4.1. There's nearly a 2% difference in the market. So for a lot of people where the property value has increased, especially over these last couple of years where they've paid some of that debt down, so that equity gap has opened up and you've gone from 90 or 95 when you bought the home to now below 80%. Getting access to those discounts that we're doing, we've got a customer care team that works closely with our existing clients and we check in once a year and have that chat, and it is all based around this stuff. Suddenly you go from on a $500,000 mortgage, I was like going to Rain Man on you, but I did prepare these earlier. A $500,000 mortgage, that discount is sort of, 10 grand a year just in interest. It's a little over $800 a month from a phone call, right? So it's really important to help keep on top of this stuff. And, we're really proud of the fact that we have that as part of our business and are able to build that long-term relationship with our clients, because where we start is not where we end. And the market has helped a lot of our clients make that difference. A lot of the time, if it's just debt reduction, which has been probably the last pre-COVID, takes a long time, right? But having that bump now might just mean that actually that 10 grand a year, suddenly that's now going back onto the home loan and that's helping you pay that down even quicker. So they're the sorts of conversations, whether that's owner occupied investment, those discounts exist. So would love to have that chat. If you can think of anyone that, may not be working with us, might be a couple out there, I guess. But get them in touch with us, and they're the sorts of conversations we'd love to be having. More good news. I'm on a roll here. More good news, all from me. Remember that. Is we've seen a couple of the majors, or a couple of banks in general, start to readjust the restrictions they've had during COVID. So there was a lot of restrictions around particular postcodes in particular areas where you needed to have bigger deposits. There were certain postcodes that were pretty much just flagged that went from 95 to 80 overnight. So you've gone from needing to have a 5% deposit and wanting to buy in that area to needing a 20% deposit. So we've seen them start to come back out of that now, which is really good. So it's a big commitment from them to shift a ruling like that nationally. But the great news, if you ever sort of did have some problems maybe with a postcode that you were looking at buying, or you couldn't get the equity out that you wanted to because of that, chatting to your bank, those rules are now changing. So we're back in market, and in particular for the FHLDS or FHGS. First, the government guarantee. One of the majors in particular had some unintended consequences, I guess, of those rules. But they have
so the professionals.
The medico. Professionals were actually capped, suddenly needing to have bigger deposits, which wasn't the intention, but it happened by default. So they've now unwound a fair bit of that stuff. So there's really good news this week. So really happy to have been able to reach out to a couple of clients that were trying to do pre-approvals previously that are now back on and can get themselves into the market. So all good news, other than Loz's part. Lucky. I'm sorry about Loz's part. We had to get it out there, and we had to let someone's got to do it. Tell you about it. But as always, look, lots happening. The market is still kicking along. We're into spring. Spring is selling season. Traditionally, these next sort of 4 to 5 months, that September through to January is real estate season. It's on. And it's been a crazy run up to here so far. So, if you are looking to buy, if you are looking to sell, it's a really good time to be involved in real estate in these next couple of months. So by all means, reach out, get yourself organized early, and we'd love to help. And it's bloody good to see the sun, which is nice. We're back on with some hot weather. So looking forward to a big summer. Enjoy the weekend, and we will see you guys next week.
Sounds good.
Bye.